Hi, my name is Alex Medina, and I came here today because I would like to get some car insurance.
There are two coverages that are also optional, your choice, that would pay for damage to your vehicle. One is called comprehensive, the other is called collision. Collision pays for damage to your vehicle which is caused by you colliding with someone else or something or someone else colliding with you. Any damage caused by collision would be paid for out of that coverage. One other coverage is uninsured motorist property damage, and that takes the place of the property damage coverage that you took in your liability coverage that uninsured person doesn't have, who hits you. This would pay for damage to your car. The next coverage is disability. It's loss of earnings. If you are disabled in an automobile accident, then we would pay you up to $350 a week for lost earnings. The maximum the coverage would pay out is $15,000. But it certainly helps to replace lost income if you are injured.
Yeah, okay, so if you don't mind, give me the paperwork so I can look over it, and I'll be in touch, okay? Yes, my name is Lee Bradley, and I came here today because I'm interested in getting some information about disability insurance. Do you think you could help me with that? Well, currently I'm renting a house, but I'm most interested in the disability information because I've been experiencing back problems at work, so I thought maybe you could give me some information about benefits.
Now, when you get a disability policy, you have two options to choose. One is the elimination period, and the other is the benefit period. The elimination period is the length of time that you must wait after you're disabled before the policy begins paying.
Yeah, I'd actually like to have all the options before I make a decision on that so I can make a thorough comparison. Without being able to look it over, I really wouldn't be able to decide.
You could get the base policy could give you $530 a month, plus you can add on an amount of $530, which, if you are found to be totally disabled and Social Security could then start taking over and paying you also, then that additional $530 would be eliminated as Social Security begins to pay you. So you wouldn't get double payment. But we would still pay you the original $530 through the end of your benefit period if you are, in fact, disabled.
Okay, well, then my question is, if the base is $530, can that be raised? And if so, by how much? Hi, my name is Laura Bookman, and I came in today to find out about condo insurance. I really don't have a lot of knowledge about this, so I'll appreciate all the help you can give me.
Now, as you probably know, the association for the condominiums will have a policy that covers the structures. So the policy that you would need to get is one that covers your personal belongings inside the structure, your personal liability in case someone slips and falls on your premises, and then a small amount of coverage that would provide for improvements and upgrades, because usually the association policy doesn't cover.
Yes, I did have a loss that totaled about $500 due to an earthquake. It broke a window and damaged a few other things that roughly totaled $500 worth of damage.
Liability is a coverage that pays someone else if they injure themselves due to your negligence. And that means they're injured by something you did that you shouldn't have done, or they're injured by something you didn't do that you should have done. The minimum coverage is $100,000. Then it goes $300,000, $500,000, or $1 million. Now the policy comes with $100,000 and there's no extra charge for that. So do you just want to start with that? Which brings us to the matter of a deductible. A deductible is the amount that you would pay first on a loss, after which we would pay the rest up to what it costs to replace an item. So suppose that you have 5 things that are stolen. At one time, one occurrence, there would be one deductible on the total loss, say $250, and we would subtract that from the total loss and then pay the rest up to what it costs to replace those items. Now, if you want to reduce the cost of the policy, you can increase the deductible to $500, which means you're going to share more in the loss with the insurance company. Now, if you don't understand, please stop me. I'll be glad to repeat anything at all. Now, one other thing that is on the policy that you should be aware of, it's a coverage called loss of use. If you had a fire, for instance, it could be any number of things, but suppose you had a fire and you had to move out temporarily and live someplace else. You would still have to make your mortgage payments on your condominium, and you would have the additional expense of rent and possibly food and things like that at a temporary location. So we would pay all those above normal living expenses under the loss of use coverage while your condominium is being repaired. With no dollar limit, the only limitation is 2 years.
Hi, I'm Harry Storch, and I'm here to learn more about life insurance. Specifically, can you start with explaining what life insurance is? Yeah, that sounds fine. I did want to really start with a more general knowledge about life insurance and then maybe explain more specific options, and I'd even like to hear your recommendations out of those options.
Let me start. There are basically 3 different kinds of insurance. There's term insurance, there's permanent or whole life insurance, and then there's universal life insurance, which is term insurance with an investment account. Now, the term insurance is meant to be kept only for a temporary period of time because the cost of the insurance goes up with your age. And when you need it most, which is when you retire and get older, that's when the cost is the greatest, and that's usually when your income is the lowest. So it's meant to be temporary, usually during your pre-retirement years. And then there's whole life or permanent insurance. That is a policy that you can keep for your whole life, and the insurance premiums remain level. In fact, on most policies, you would get to a certain age or length of time that you have had the policy when you would no longer have to make payments. Now, an easy way to illustrate the differences, term insurance is like renting insurance, like you would rent a house, and permanent insurance or whole life is like buying insurance the way you would buy a house. You would build up equity, you get to a point where you no longer have to make payments, but you still have the house and the equity in it. So your permanent insurance is that type. Your term insurance is renting it. You pay for it, you have the protection of it while you're paying for it, but when you stop paying for it, you no longer have anything. The policy discontinues and there's no equity in the policy.
Okay, and I also wanted to know about coverage needs. For example, funeral expenses and other potential expenses. What do you think, what type of coverage needs do you think I would need? Okay, so as far as the physical exam, would I have to do that every year? And keeping in mind I am a smoker, that may have bearing on that. But would this be an every year type of doctor's exam that I would need to do, or is this a one-time only thing?
with the universal life policy is when your children actually are in college, you can stop the payments on this policy and make withdrawals from the universal life policy to pay for their college education. Then when they're through college, you can start making payments again and just continue on until you're 65. It's set up so you are in control of when you make the payments and how much. You can increase or decrease the payments too. In doing so, you would simply increase or decrease the amount in the investment or savings account.
Okay, yeah, that sounds fine. It sounds great. I will need to discuss this with my wife first, of course. So once we look everything over and get everything figured out, then we'll come back in and sign the paperwork.